All right, yes, perfect. So let's get it started right here. Of course, the economic calendar plays a huge role in what we can expect from price action. And then next to that, it was quite an interesting week for fair value gaps and the transition of order flow, as I like to call it. Now, first, looking at the economic calendar right here, we had some news very early on in this week. That's also why we expected a huge move right there on Monday coming into the monthly fair value gap right there. Then for the rest of the week, it was quite calm. We had some FOMC members speaking. With FOMC members speaking, even if it's an orange folder news, it's always a little bit difficult, always a little bit unpredictable, because they might say some of the craziest stuff in the world and everything goes to shit, very plainly said. And that makes it a little bit difficult right there to expect or what to expect from an FOMC member speaking. So it's something we can take into account. It's also something that brings in volatility in the market. So we can definitely say that. Other than that, we had an unemployment claims right there, which was the only real red folder news that we use on a regular basis. Then Friday also didn't have anything. So it was quite a consolidating week. Pairing that with the resistance area that we had right there, which we talked about or we focused on this week in the FVG sessions, which is also what I want to focus on again today, which is quite important to understand, because when we run into this monthly FVG right there, and then we also, well, if we want to continue lower, we can continue lower off that monthly FVG, which is a premium rate as we understand it. So this monthly FVG might want to hold. Well, in order for that monthly FVG to hold, what we need to create right here is a new sharp turn lower. But in order for us to do that, we are running into this daily FVG gap right there, which is the first resistance area, like we talked about very in depth this week in the sessions, where if we want to continue higher right now, we will see a new FVG gap higher being created to continue higher off of that new FVG gap, very easily continuing and overtaking the monthly FVG gap. But if that does not happen and we indeed want to continue lower, then we will overtake that daily FVG gap with a new daily FVG gap lower right there. But this is not the only thing. This is the very basic understanding, because we also saw something on crude oil this week, which was very interesting, and where this actually happened, but where we continue lower, but it did not hold. And that was very interesting to see as well. So we're going to dive into that very in depth. Now, if we then move on to ES, overall, we can say right here that the dollar was just consolidating, which allowed us to understand as well that it was not the highest probability week to trade. If we look at this in terms of the stage of probability, then right here, it requires a little bit more patience from our side to then eventually, once we then continue lower, to then look to get involved, because that's exactly where the high probability price action will happen. Not here. It's the first transition area. Then on ES right here, let's dive a little bit deeper into this as well. Now, this is quite interesting actually, and I want to dive into this as well quite deep. And the reason for that is because we never created a daily FVG gap higher. And I did mention at the beginning of the week, even though we do not create a daily FVG gap higher right there, I think price will already continue higher. Where in comparison to this right here, where we mentioned, all right, we do not create a daily FVG gap higher, so we will continue lower. So what is the differentiator right there? Well, the differentiator here is that there's no reason for price to actually come back. Meaning, at that moment in time, this daily FVG gap, or the daily FVG gap not being created, was a great reason for us to then come back into this weekly FVG gap. So there was always a reason, there was always an argument for price to potentially come a little bit lower to then continue higher. So there was always already a question on if does it want to continue higher right now, or do we want to continue lower a little bit, where after we come into that weekly FVG gap, there is nothing anymore. There is no reason for price anymore to come back below that weekly FVG gap, to come back below those lows, to then continue higher. That doesn't make any sense. And it doesn't make any sense because we have an all-time high sitting right there, which was bound to get taken out, which was bound to get traded above. So that draw liquidity is so strong in itself, and price is being going higher, actively hunting that all-time high right there as well. that it didn't make sense for price to then all retrace all the way lower to then sweep those lows to then continue higher again. No, the drawn liquidity is extremely strong already. So even though on the 4-hour right here and on the 1-hour, the price action was not the nicest. It just wasn't super clean in my opinion. It was quite messy overall. The drawn liquidity, and this is what you'll hear me say quite often, the drawn liquidity is easy, as in it's quite easy to understand where it wanted to trade it towards. But the overall delivery and trying to get involved right there might cost you 3 losses before you actually catch a winner. So that is the difficult part right there. But we also want the delivery to be clean to minimize the overall losses that we are about to take. And when I say the delivery is not clean, I am basically also referring to fair value gaps, because the only delivery that was quite clean was these 2 fair value gaps higher right there. That's the only significant thing that happened during this week. Other than that, it just wasn't really special, wasn't really nice. Now, right here, even though we were consolidating, then that daily value gap and the drawn liquidity right there, daily value gap not being created, that led me to believe that we still wanted to continue higher, even though we had messy price action, even though in a normal situation, we would almost expect lower prices right there. In this situation, it was not the case. And that is quite important to understand. It's, again, what we talked about all the way at the beginning of the fair value gap enrollment. It's not necessarily about having mechanical rules when it comes to fair value gaps. It's more so about reacting to whatever is happening. There's a lot of different things going into the thought process of whatever fair value gap wants to do and the non-creation of a fair value gap wants to do. Because if there's no reason to continue lower in the first place, there's no reason to come back, then the fair value gap not being created is not super relevant, because then the drawn liquidity is strong enough and will act as a stronger magnet right there. Where, before I start repeating myself, I'm going to repeat it one more time. Where right here we have 2 magnets. So do we have the beautiful emoji where I can actually use a magnet? Well, let's just use the eye. We become real ICT traders with the eye right there. And when we mark it out like this, then we have 2 magnets. There's two variables to one story. We can do 2 things right there, which makes it a little bit confusing, because now we need to react more. Where then if the fair value gap does not get created, all right, that's a great sign that we do not want to trade into the draw on liquidity first, but into the weekly fair value gap first, which is then the draw on liquidity. Where once we trade into that, this eye is gone, the magnet is gone. So the only magnet that we have left is the draw on liquidity right there. So whatever happens right there might not be the nicest price delivery, but the only thing we can really do is continue higher off of that. So it's a huge mindset shift right there on fair value gaps as well. Then moving on to NASDAQ right here, we also mentioned the same, where we had that highest target, also coming off of the weekly fair value gap, of course, as we knew it right there. And when we came off that weekly fair value gap, we also did not create a new daily fair value gap higher. It's the exact same story as on ES right there. This is also an all-time high, but it's just the same target right there, where eventually we continue higher. Overall price action and the delivery of that was not the nicest, but I do want to dive into one area right there, which was very nice, and I love those areas. If we go into the 1 hour first, then on the 1 hour, we can see that we have this 3 swing movement. Now it's very zoomed out right there. And what I mean by that is that we have one side of price action, which is the buy side right there. This offers buyers to get a chance to get involved. This offers a move higher overall. Then after that, we have a retracement. Now that retracement for us is into a weekly fair value gap. That is where we are now offering fair value, because now we are giving sellers a fair chance to get involved. And then once we move higher, this whole area, and this is the fair value area, but of course, the whole move higher right here is now fair value. So this whole area is fair value. To narrow it down a little bit, we have this fair value area, which as we know it, creates a mitigation block. And if we zoom out enough, it creates an order block. So a fair value area is either an order block, a breaker block, or a mitigation block. And once we then run the liquidity. So we do not sweep the liquidity, and that is a very important factor. And what is the run on liquidity again? Also seen through fair value gaps right there. We want to see a close above the high that we are trading above right there, and a fair value gap ideally perfectly overlapping with the high itself. That creates again that overlapping gap right there, and that overlapping gap, which is not the full fair value gap, which is only this part, let me mark it correctly, right there. This is the overlapping gap right there, and that is exactly the fair value gap combined with the high, of course, that we can continue higher off of, because that is the only place where price can actually return to, where it can make a retracement towards before we want to continue higher. And this happens quite often, and this allows us to have a very good accuracy because we're not expecting a return to these fair value gaps or those fair value gaps, which in my experience, when I just started trading, I saw all these fair value gaps and I had no idea where we actually wanted to retrace towards, which fair value gap allowed me to be accurate. And if you don't have a good understanding of fair value gaps, then fair value gaps might not be great because they don't give a lot of accuracy if you don't know how to use them. And what I mean by that is that if you only see fair value gaps, then you're going to mark out all these fair value gaps, which then just leads to overall confusion of where we want to continue higher from. So this is the only place where we can really continue higher from. Now, it's important right here to understand the following timeframes, because the further we move along in time and the more time is ticking and ticks by, etc., then we are going to create a new fair value gap. And that is going to be on the time frame above it, where the same exact thing will happen, but now it is happening on the time frame above it. So when the 1 hour right there fails to follow through slowly right there, it's not reaching those context high. Eventually we need to take into account that next day right there that we have a 4 hour fair value area with a 4 hour overlapping gap. If this happened on the daily, then we need to take into account the daily eventually. So all these things right there is what we need to take into account. And again, this is why it's difficult. It's not beneficial. Let me put it that way. It is not beneficial for us to make this mechanical because there's a lot of things going into it. So if I say one thing right there, then that one thing might play out in a very specific situation where if we want this to work, and the best way to make it work is, unfortunately, we have to study it. We have to be a little bit subjective. So, and again, there's no shame in that, I believe, because that subjectiveness is what we always tell is the 20% of our trading plan. And that is what allows us to have such a great skill, such a great read on price action, knowing what it wants to do. It allows us to have a better win rate, a better return overall. So why fully mechanical is not a great way to approach the markets, in my opinion. So this is where we eventually continue higher, fail to create a new 4 hour fair value gap though. That is something I do not like about price action right there, where eventually it's the same story. Now we can refine this story a little bit. And we can make a lot of refinements just based on the basics. And what I mean by that is the refinement here was made on a fair value area right there, where we actually want to continue higher from. The area we want to continue higher from was based on a fair value area right there, which is a basic of trading. And oftentimes traders on social media, they look for outside concepts. They look for a variety of concepts that are not the basics to get more accuracy. The opposite is true. If you want more accuracy, then use the basics, study the basics, because the basics tell you exactly where the accuracy is going to be. And this is seen through a fair value right there, fair value area, because we know the market moves in two different ways. Either offering fair value or taking liquidity and doing the opposite and targeting other liquidity. So when we then reach above this high right here, the context high right there on the 4 hour, then at first instance, I would argue that looks very much like a sweep. So we are respecting a discount array and we are also respecting a premium array, overall creating a very 50-50 area right there. Now, you might remember the thing we talked about earlier on the dollar right there, the 50-50 area, and that we do not want to get involved. Right there, we want to wait a little bit. And then we mark out these highs, these lows right there. But we can get more accurate with this, where we do not need to wait for those highs or those lows to get taken out, where we do not need to wait for a body closure above those. No, we can already trade towards those highs and lows right there. How? Well, this high, as we know it, if we are truly sweeping that high, then at that moment in time, right there, we should now stay below this high. We should not have a body closure above that high right there. We should not be comfortable above that high, because if liquidity is taken, then that liquidity needs to be met with opposing liquidity. That is a process that needs to happen fast, because people that are buying right there on the breakout, that now have their stop loss below those lows, they need to be taken out very fast. They do not need to be given a chance to mitigate their position right there. And that is quite important to understand, because that allows us to understand when we eventually start to comfortably move higher like this, like a candle like that, that indicates to us already that we do not want to continue lower right there, and we can eventually continue higher. So this is nicely seen on the 50-minute as well, where eventually when we create those 50-minute FVG gaps higher and we get comfortable above that high, which should never happen if we are sweeping liquidity. Even the signs that we already had earlier, the time we are above that high, the amount of time, that's too long. We ideally want to see a perfect sharp turn to then continue lower. So eventually, that is where you can get involved very early on. And again, I'm talking about NASDAQ, where the time might not be aligned currently, but this is on every single pair, every single instrument out there. So this is a great way to catch some day trades and to catch some scalps right there as well, without needing to wait a very long time. Because here you already see we are trying to push higher, and we should not come back above that high right there. So that high is a great indicator to see what we actually want to do. Where eventually we decide to follow through as well, and we just continue higher, continue higher, continue higher. Then if we move on to YM, let's see, YM a little bit more difficult. YM overall sweeping a lot on both sides of the market. No fair value gaps really following through. Again, we can see that very clearly right here with a 4-hour fair value gap like this one, overlapping with the order block, not creating a new 4-hour fair value gap higher off of that. That's a great indication that we do not actually want to continue higher. And it's the same right here for this fair value gap lower right there. We do not follow through off that. It's a great indication that we might not want to continue lower. So what do we want to do? Well, seek and destroy conditions where we sweep both sides of the market. We have long wicks on both sides of the market. That's overall what we're seeing here on YM. And my thought process here on YM is that YM is done. YM's shift is done. It's clocking out right now, and it's just waiting for his buddies to also be done with all-time highs, with sweeping all-time highs, with whatever we want to do right there, to then eventually have a retracement. And once ES and NASDAQ are also ready to clock out, done with their shift, and they're ready to continue lower a little bit, then YM can also continue lower. So that's the feeling I am getting right here from YM, and where eventually we can look to target a bigger discount array in the form of weekly fair value gaps overlapping with these highs right there. Potentially, if we wait long enough, monthly fair value gaps right there overlapping with the fair value area right there as well. And that will tell us a lot eventually, right? We actually want to continue higher off of that. Then looking at DAX right here, let's see. Looking at DAX, we can see the same fair value area, right? Very interesting. To then continue higher off of that. Only thing is that we do not really create a new weekly fair value gap off that. We do not create a weekly fair value gap at all. So not really is not a great statement. Then that premium rate right there is what we are currently sweeping constantly. So we're having a difficult time to close above that. And that's a typical characteristic of DAX as well, which makes it quite difficult to trade those all-time highs, because it's constantly sweeping those all-time highs to then return, sweeping to then return, which makes it quite difficult overall to trade this. If we dive a little bit deeper into the low time frame, because if you're trading a flow trading plan here, there's two different perspectives, right? Filtering process trading plan, stay as far away as possible from this instrument as you humanly can. So delete it from every single list that you might have. For a flow trading plan, all right, let's dive actually a little bit deeper into this. Let's do some more research. And the way we can dive deeper into it is by gaining more clarity. And the only way you gain more clarity right here is by looking at whatever the lower time frame is doing, which is actually the opposite of what you would want to do in a filtering process trading plan. So that's, again, the two different perspectives, where a lot of the time I refer to a filtering process trading plan without actually mentioning it, where a flow trading plan, it's still perfectly fine to trade. So the only real move I saw here on DAX that I did quite like, well, actually, let me break this down from the beginning. On Monday right here, we tried to continue lower, and we did not continue lower right there. And there's a reason for that, I believe. And the reason for that is because ES, NASDAQ, and mainly ES still had that all-time high that it wanted to target. DAX right here is, as I like to refer to it, is the long lost brother of the other indices, where it's not family related, but it is somewhat very far related, etc. So it will still follow whatever the other brothers want to do. Where if the other indices want to continue higher, then DAX will simply follow. If the other indices want to continue lower, then DAX will simply follow along. So if DAX right here is showing signs that it wants to continue lower, DAX in itself is not strong enough to push lower. It needs ES, it needs NASDAQ to agree with that ID. It doesn't have the right to do it on its own. Where that is what we mentioned leads to then consolidating price action right there and potentially even a higher price overall. But that is very important. This is the same situation as YM, where DAX and YM are almost giving signs we want to continue lower. But we're simply waiting for ES, NASDAQ to also continue lower to give the green light that we can actually continue lower. So after that, we do have this 4-hour value gap being created right there. Well, before I dive into that actually, when we come above these highs right there, above these highs, there is no resistance anymore. And this is something we dived into pretty deep as well in the FVG value gap sessions, where on NASDAQ we had a beautiful live trade example of this, where right there, above those highs, there is no resistance anymore. The only real resistance that we had was this 4-hour value gap right there. And when you're looking to scalp, then these areas, focusing on these areas, those small areas right there of price action is very beneficial. Because when you then see 15 minutes for value gaps and 5 minutes for value gaps aligning right there towards those highs, where actually we see a first rejection that we have right there, sweeping that high, then eventually we come back. So the rejection is already done. Then we see fair value gaps aligning right there. These fair value gaps are extremely high probability to trade off of right there to continue higher, because that is where the rejection already happened. There's nothing to reject off of anymore. So price action will happen very fast. It will do it extremely fast. It's also what we had a deep dive into this week, and which we can see coming back to a lot of pairs right there as well. Then eventually the 4-hour value gap, let's talk about it. So this 4-hour value gap right there, we did not create a new 4-hour value gap heading into it, which is already a great sign, of course, because overall, to be honest with you, I was not too sure if we wanted to continue low right there, because overall the conditions here on DAX were just not that nice. The story I just told you about the long lost brother, etc. DAX right there, in my opinion, was not ready to continue lower. So if we do see that rejection, then we want to make sure it's a very quick, short trade. Where right here, on the 15-minute and on the 5-minute, eventually we start creating the price action to potentially continue lower. Eventually we have a bigger retracement as well, having some messy price action overall, which is not that crazy because, again, in the overall leg lower right there, there's no value gap anymore. So all this price action right there can get swept to eventually continue lower right there, where, again, I'm not using the value gap right there. It's already mitigated. I'm using the swing high that we have right there. So at the right time, at London session right there, once we sweep that to continue lower, we're able to react to eventually continue lower to target those lows as well. That's very important. Then moving on to Australian dollar, US dollar right here. Let's see. This overall was quite messy. And the reason for that is because this is, of course, hugely affected by the dollar, where the dollar was simply having that resistance. And at this moment in time, the only real thing that interested me was the 4-hour ST that we were creating right here. And then we had this 4-hour value gap left behind. If we come into that to then continue higher off of that, that would have been very nice, lovely price action. We can see we create 4-hour value gaps going lower into that. Huge rejections lower. Where the earliest sign we get actually that we do not want to continue higher right there is once we comfortably stay below this low right there. This candle is not too crazy, as in that candle right there is where we can still get the idea of, all right, if we want to continue higher, we can still sweep that low right there to then continue higher off of that. So it's not that crazy. We can still sweep that low to continue higher. But then on the same thing happens, right? It's all fractal right here. So those basics, the fair value gap, the liquidity is extremely important to understand, because when you understand that, then right there, if we go into the lower time frame and we look at those lows, then we will see this is not sweeping. It's a run on liquidity. So as soon as that happens, then we can comfortably say, well, this is not interesting. And we save ourselves a lot of unnecessary losses that we might have taken right there to then try to guess on where it actually wants to continue higher from. Where here you simply want to wait. And the thing you want to wait for is not necessarily clean price action on Australian dollar, US dollar itself. You want to wait for clean dollar price action. And when you get clean dollar price action, then you can move on to Australian dollar, US dollar, and the rest to get a better view as well. And the same goes for EU, for GU, for all the other pairs that you see right there under the Forex section. Where EU, of course, inversely correlated, the same exact thing happens right there, running into that resistance. And ideally, what you would want to see is a new daily fair value gap higher right there, new daily fair value gap lower below those lows. One of those two. We can already get early signs by 4-hour fair value gaps, etc. On the basis, if we are not sweeping those highs anymore, right there, we comfortably close above it, 4-hour fair value gaps higher, to continue higher right there. But of course, the safest bet is to wait for a daily fair value gap as well. Then the same story, and that makes the Forex pairs overall not super interesting to do a breakdown on, is because it's all extremely correlated, where the indices are less correlated with the dollar, of course, still correlated, but they will still move. They will still have some kind of move, most likely, where if the dollar is consolidating or overall just not having a nice price action, then that will be reflected onto the majors right there, which of course will make the crosses a little bit more interesting as well. Then right here, we can see the same price action overall, where we had a couple of 4-hour value gaps failing. We had a huge move lower. That 4-hour value gap right there is not super interesting to me. I would not have marked that out right there to continue higher off that. I would want to see a little bit more price action overall to confidently say where it wants to head towards right there. Then New Zealand dollar, US dollar is the exact same story, but this is a little bit different because it more so responded to our call of what we wanted to see off of price action. Here we got a sweep of these lows right there, which again, we can basically see through that fair value area, understanding that liquidity right there. And the reason I say that is because this right here did not create a fair value gap lower overlapping with those lows. It had a very aggressive move higher right there. So we can confidently say that might be a sweep. The sweep is confirmed once we have actually a daily fair value gap higher right there. That is very, very lovely price action overall, because now we can look to target those highs right there. Eventually we can target even above that. Again, the fair value gap we saw, the weekly fair value gap we saw is not relevant because that is not the premium rate anymore. The premium rate is the swing highs that we have. Then once we sweep those lows right there, we can also see that we have the daily fair value gap. And once we come into that, we can potentially continue higher off that. I wanted more confirmation here. So again, do not assume right there that I would have definitely caught that trade, because I would not, because I wanted more confirmation there because the dollar was unclear. So to then tell you right now, New Zealand dollar, US dollar is definitely something we should have traded right there and it was super clean. That's foolish, because the next time this might happen where dollar is unclear and New Zealand dollar, US dollar is showing clear signs, it might just be a trick. where the same happened on EU, GU, Australian dollar, US dollar at the beginning of the week. We saw clear signs, but it just didn't follow through. So it almost becomes guesswork, where, all right, which of these pairs will actually follow through? The only thing we can do to get a more accurate picture which one actually wants to follow through is demanding more confirmation. So off of this daily FVG gap, I demanded also a 4-hour FVG gap right there, which eventually we got. So that tells me that price action is willing to sort of oblige, as in price action wants to compromise something and actually wants to continue higher, and actually has a strong price action as well supporting the ID. So that right there is actually quite nice price action overall. The only thing is that we did not have time supporting the ID. So that also leads me to say, all right, that is not something I want to get involved in right there. Now, if we move on to US dollar, Canadian dollar right here, where overall this week was very, very messy. And we came above those highs right there. We can again train your eyes to see those sweep characteristics, because that is very interesting to see, because when you understand those sweep characteristics, you also understand right there the fair value area, and that we are not respecting a fair value area. So that fair value and that liquidity they are opposites, where if one thing isn't happening, then likely the other thing is happening. So if we're not offering fair value right now, then we're likely targeting liquidity in the form of these lows and eventually the weekly FVG gap that is sitting right there. Only thing is that the dollar was not clean, and we need price action to support the ID. This is where eventually we also create unusual context to potentially continue lower. The 4-hour here was just really not that nice and was just messing around a lot. Did not come into the 4-hour ST right there higher. So nothing really to tell here. Nothing really interesting besides the sweep and the fair value area. But overall, the news right here, we did have news supporting the ID. Price action just wasn't really clean. 4-hour wasn't clean. So in here, unless you're trading a flow trading plan again, you can go into the 1-hour right there to get some short trades, so very quick trades. Other than that, this is not something I am interested in. US dollar CHF, let's see. This one was very interesting. And the reason it was very interesting is because it continued higher, whilst the dollar was not continuing higher. So that indicates to me that CHF right there, the Swiss franc, is very weak. And if we look at this a little bit deeper, then on the weekly right here, we had a weekly value gap that we could look to follow through on. So that high right there, extremely nice context, absolutely lovely. Then on the daily right here, we were already continuing higher. So we also had news supporting the idea at the beginning of the week, which led me to believe, with dollar also targeting that monthly value gap, at the beginning of the week, we are likely going to take out that high right there quite fast, which did not happen on Monday actually, which to my surprise, actually I did not expect that. I expected us to already trade above that high on Monday because of the news, etc., all those factors. All right, it happens on Tuesday. Then on Tuesday right there, it gets extremely important to understand two things. The sweep of liquidity, because we have a beautiful sharp turn. Absolutely beautiful sharp turn right there. Textbook sharp turn. But there's something right there that prevents me from going into the 5-minute right there to look for a short opportunity. And that is this daily fair value gap that we are having right there. Because we are simply said respecting a discount array right there, coming into a premium array. Let me mark the daily fair value gap a little bit more clear. This daily fair value gap right there. We are respecting the daily fair value gap right there, a discount array, whilst coming into a premium array. Whenever that happens, that is a distortion of balance. You could almost see it. Now that is a little bit, I can understand that might be a little bit confusing, that wording. There is overall not a clear balance in the market right there, where if we want to continue higher off of a fair value gap, we should ideally have the balance in favor of bullish prices. So what that means is the same right here. When we come off of this premium array right there, which is again a swing high, we leave behind this 4-hour value gap right there, higher. Now we know once we come into that premium array, currently it does not seem like we actually want to continue higher. So we can expect a rejection right there of that premium rate, which makes the balance in favor of the premium rate, not the discount rate right there. This is when you can exactly expect bigger retracements inside fair value gaps, but also a disrespect of fair value gaps. So where the same thing happens right here. We have this 4-hour value gap right there. We are respecting this discount rate. So the balance is in favor of the higher prices currently. There is no real balance in the market, where if we have perfect balance, then that creates a situation like the dollar right there, where we are consolidating between two, premium and discount rate. Then right there, once we create this higher prices, we have the same thing happening right there. This 4-hour value gap, where we can now see this is only a small sting into that, because we are not respecting that 4-hour premium rate. We have huge aggressive moves higher going off of the daily value gap, continuing higher right there. This is where the balance overall is in favor of higher prices, meaning that we can only expect a small retracement right there to then continue higher, fast price action to then rocket launch higher almost. Where the same thing happens here, right here. We have this 4-hour value gap, and we can clearly see we are now not closing above it comfortably. We do not have that fair value gap exactly overlapping with those highs, which I always like to see. When we have fair value gaps exactly overlapping with those highs, it's a great sign that we immediately want to explode higher. Why? Well, we can look at this from two things. We can look at this from the perspective I just mentioned, balance overall. Also, simply said, which side is stronger, which automatically leads to the same story, balance. And to go on about this, because I want to clear this up, because it might sound a bit confusing at first, is that if we are strong enough, we will close, if the bullish prices is strong enough, we will close with a fair value gap exactly overlapping with those highs. And that leads to then, all right, the bullish side is extremely strong, meaning that we can already continue higher off that without having too much of a retracement. For example, on NASDAQ right there, the price action we saw right here, we close comfortably above that high. We have a fair value gap overlapping with the fair value area. We know that this is not bound to have a huge retracement. Why? It's just having extremely strong price action. There is no premium rate in the picture. There's only discounted rates, and those premium rates are just not strong enough to do anything significant. Where here, US dollar CHF, the premium rates are doing something significant right there. They are being somewhat respected. So that is when those 4-hour value gaps continue higher right there. Yes, we can still expect higher prices, but it's important to understand that we will have a deeper retracement into those 4-hour value gaps, or we might disrespect them at first sight to then continue higher off of that. That is very important, and that's a huge detail to understanding how far we will retrace into a fair value gap as well. Where same scenario right here. And this is great to do deep work sessions on as well. So if you want to do deep work sessions, then you have something to do this weekend. You probably already had something to do. So if it's a burden, then don't do it. But right here, we do not come into any premium rate, or we do not respect any premium rate to the left right there. Every premium rate has been respected. So the last one we actually had was these highs right there. We do not respect those highs, as in we comfortably close above them. There's no real reason to worry about any premium rate potentially switching around and creating bearish order flow. Then this 4-hour value gap that we have right there is where we can only expect a small sting into it to then explode higher, because the balance is in favor of bullish prices, of stronger price action. A small little detail, but extremely important to understand again. And that all leads down to the same story, the basics. Because this is not some fancy concept. Well, it might seem very fancy to an outsider, but it's all the basics. If you study the basics over and over and over and over and over again, then it's all hidden in plain sight almost. Now, US dollar JPY right here. Let's look at this. Same story, and it's a beautiful concept. I really like it, and you could probably tell my passion about fair value gaps, because I can rant about this for hours and hours until I start struggling over my own words because I'm getting too tired. But right here, we have this daily value gap higher right there. we are also respecting that premium rate. So at first right there in the forecast, I mentioned, well, this is a bit tricky because the dollar, if it gets a big rejection, then US dollar JPY can continue lower. In previous weeks, I also mentioned JPY is very weak, extremely weak compared to the US dollar. So even if the US dollar consolidates a little bit, then US dollar JPY might just continue higher overall. And again, that is not confirmed until we actually see it on the chart right here. So what do we see? We see we are respecting a premium rate. We also have this daily FVG gap. We automatically know, we automatically assume we can have a bigger retracement. We might continue lower for a little while because we are respecting the premium rate. The balance is not in favor of higher prices currently, where currently we have a perfect balance because we are respecting a premium rate and also a discount rate. That creates 50-50 price action, where we retrace a little bit deeper. Then eventually, we almost fail to create a daily fair value gap lower, which becomes an extremely small daily fair value gap, etc. Overall, it's, again, that indicates to me that we definitely want to continue higher overall, because that is not the greatest sign that we want to continue lower. Otherwise, we would have created a very comfortably ST, for example, like we're seeing on the 4-hour right here. And on the 4-hour, we run into that 4-hour value gap, which we actually already can see if we dive deeper into this and get more into the details. If we want to continue lower, then we should continue lower with the next candle being another down candle, and the next fair value gap lower should be created as fast as humanly possible. So ideally, the next candle is an expansion phase, which makes it a little bit more difficult because for the next candle to be an expansion phase, it would need to close below this low, and it would need to create a fair value gap expansion phase below that low. So that is quite a lot that we are demanding off of price. So this is, in this situation, again, and the reason why I don't want to make that super mechanical is because let's say we now have a close like this. We have a candle like this, and the next candle right there has a much easier task to create an expansion phase because the low of the previous candle is sitting right there instead of right there. So it requires a lot less volatility overall. So the third candle, it has a comfortable manner right there of creating a fair value gap. The odds of it retracing all the way towards those lows of that first candle is lower. Where in a situation like this, if we do not have this candle right there, and we have something like this, then this becomes a little bit more difficult. Because now we have a smaller margin right there to create that fair value gap. So the thought process right there is that to give it some time, but not too much time. And again, that is the thought process that goes through my mind in order to understand what it actually wants to do right there. And when we can continue lower. So this next candle is ideally a down candle. Can be a consolidation, but ideally somewhat of a down candle. But that next candle after that, I definitely want to be a down candle. And if this is already an up candle like that, all right, that is very interesting, and that is weird behavior of price action. Because again, when we are sweeping those highs and we definitely want to continue lower, yes, we can have somewhat of a retracement, but high probability price action happens extremely fast. Where at this moment in time, I would argue we don't really have that balancing factor like we talked about. As in, we are not really respecting discount arrays, clear and obvious. Yes, we have somewhat of a breaker. Clear and obvious discount arrays, well, I would argue, no, not really. We are not really respecting clear, obvious discount arrays right there that might tell us the story of having a bigger retracement into that fair value gap to then continue lower. So if those signs are not lining up and the story is somewhat vague to continue lower, then what are we likely going to do? Well, then we are likely going to continue higher instead. So where a lot of times right there, I would mark out the 50-50 area right there because we are running into the 4-hour first resistance and the daily value gap first resistance area right there. This is the 50-50 area. We already know that it might want to continue higher. So we already know we are one step ahead of actually mark out the 50-50 area, which is actually a YouTube video that is coming out today where I mention mark out the 50-50 area right there, wait for a close below or wait for a close above right there with the fair value gap. It's the safest option. But we already know by going into those details that this wants to continue higher. We can already tell it a little bit earlier than the rest right there, which is our advantage. So eventually we can trade towards those highs. Same exact story where once we have these moves higher, we can trade towards those highs already earlier than the rest can do. And that is important. Now, eventually we also continue higher and we then comfortably close above those highs, exactly what we would want to see if we do want to continue higher. Moving on to silver right here. Now, silver is interesting. It is also very much consolidating, but there was one instance right here where I did like silver if you are a flow trader. Again, filtering process trader, remove the chart, throw away the chart and don't open it ever. But flow trader, this is quite interesting because the 4-hour FVG gap right there was an extremely clear draw on liquidity that we actually had during a live session. Where during the live session, we were continuing higher. And I still have the 5-minute fair value gap right there actually marked out. And that 5-minute fair value gap is where we can continue higher off of to then target the 4-hour fair value gap right there. And when we then can continue higher, all right, we also need to take into account, again, the further time moves on, the further the clock ticks, the more the clock ticks, is also a sign that we are, of course, creating new fair value gaps. So these 50-minute fair value gaps, or that 50-minute fair value gap, is being created right there to potentially continue higher off that. With the 4-hour fair value gap being the only real clear draw liquidity that we have. So right there, that is exactly where we can eventually look to continue higher from, where we get price action supporting the ID. So if you're a flow trader, then this price action right here is exactly in a week, in a messy and quote unquote bad price action week, is exactly what you would need to capitalize on right there. This move higher right there, targeting that 4-hour FVG gap. One small instance during a big week where the draw on liquidity is extremely clear, and that is exactly where you would want to capitalize on if you have a struggling week like that, especially if you're a flow trader, because you are more prone to or you are more, how do I say that properly? You are more prone to not do anything during a week if there's low probability conditions, where a filtering process trading plan, like I mentioned, you would turn off this chart, you would throw it in the bin, and you would look at something else. Flow trader, if you stick to silver, you are lost, as in you have a very difficult week coming up. Let's put it in that way. So right there, you want to capitalize on those small moves right there where it is actually clean and where we can make sense of price action right there. So eventually, these fair value gaps right there is very nice to as well capitalize on to continue higher, targeting the 4-hour fair value gap, which we mentioned in the fair value gap session, which is the previous fair value gap session, session 8, I believe. Moving on to gold right here, and it's the same like silver. Overall, this price action, I don't think we need to go in depth on this, because this price action was just messy. It was just messy. Consolidating was just not that nice overall. So that is quite important to understand as well, that this right here is extremely messy. And it's the same scenario where once we have these 4-hour value gaps, if you're a flow trader right there, then a move like this higher is what you need to capitalize on. Now, how can we know that actually wants to move higher right there? Well, we mentioned right here, when we came into these order blocks and into those fair value gaps right there, we had an aggressive move higher. So again, seeing that from a balanced perspective, if we want lower price, then ideally we should not create a fair value gap higher. Ideally, we should not even be close to creating a fair value gap higher. So no expansion phase, nothing crazy, just a small and easy move, easygoing move into the pre-raise to then continue lower off of that. And what we see right here is that we do not do that. That is already a first sign to me that we might not respect that to continue higher off that. So right here, going into the 5-minute, of course, we are not sure because we are running into resistance. So we are not sure if it wants to continue higher right there off this 4-hour value gap, which is exactly when you will see price action like this as well. Price action like this is very important to understand that you need to almost wait until the last minute right there to capitalize on the last smallest move. So capitalizing on those moves is paired with a lot of patience, where the initial move is, or the initial entry is not the best entry. And the reason being for that is because the same balance story, where if we are in perfect balance, so we only have arguments to continue higher, there is no premium rate being respected, for example, then the first entry is usually the best entry. But if is some kind of balance and we have both a respect of premium rate and discount rate, and we expect a bigger retracement like we did right here, then the initial entries, like we see right here, if we get an ST plus RE, those are not the best entries. You want to wait longer and longer and longer until we have we can confidently say, all right, I do think that currently we can definitely look to continue higher. Where almost the last trade ID happens when we have almost reached the drawn liquidity. That is very important to understand as well. Then moving on to Bitcoin. Now, Bitcoin was quite nice to see that we are continuing higher right here. And right here, it's the same balance story, although it's not as interesting as the other ones. But right here, we can see we are respecting this premium rate. And I actually saw on Twitter some crypto people saying, all right, I think we might want to continue low right there. And until that moment in time, I would agree with you to some extent, but not fully. And the reason being for that is because we never got any signs that we wanted to continue lower. We never got a daily FVG lower, which to me indicates that we almost forget the whole story. And this is what happens usually a lot when people get into a trade ID and they almost forget and they start to micromanage, they start to move their stop loss a lot, they start to move to break even, they get anxious a lot because of price having a retracement or doing something that wasn't expected or was not ideal in its scenario. Because of course, we would like to have our take profit hit within the next 10 seconds. And if that does not happen, then emotions are likely coming up, if it's not euphoric emotions. So right here, it's important to understand and to remember the whole trade ID that we had in the first place, which I believe a lot of people seem to forget and have this short-term memory with trading. Where right here, the whole trade ID was a weekly fair value gap right there, or sorry, weekly fair value gap, yes, but respecting that right there, creating context to continue higher. This ID never got invalidated in the first place. So here on the daily time frame right there, just having that consolidation where we are sweeping that high potentially. Yes, I do agree. That's why I wanted to wait for a new daily fair value gap higher or lower to confirm the ID again. But overall, we need to remember that the trade ID never got invalidated. As in, we are still bullish. There is no reason to be stressed. Yes, early signs to potentially say, all right, I do not think that we want to continue higher anymore. But that ID never got confirmed in the first place. So that is very important to understand. And here on Bitcoin, it's not that fancy, as in it doesn't affect you that much. But trade IDs in itself, when you are in a trade and when your risk management is, well, you're actively managing your risk during a live trade, that's important to understand. Always remember, it's like, try to explain it as best as I can here. It's whenever you struggle in a process, and for example, you want to become a profitable trader, you sometimes get lost in the thought process of, is this going to work, etc., and all these things, all these negative things happening to me. And usually people always say, all right, remember why you started. And it's the same exact thing right here. Remember why you even got into the trade in the first place, where that short-term memory might prevent you from having a winning trade, might miss you out on a winner. Where it's very important to understand, if you remember the original trade ID, then there's nothing really to stress about right there, because there's no real bearish signs. We only got bullish signs. So there's nothing going on. Very important. All right, in crude oil right here, also extremely interesting, because on the monthly time frame, we can potentially look to continue lower off of that monthly fair value gap that we are seeing. If we want to continue lower, then the lower time frame, of course, should support that ID. Now, on the weekly, we do not really have anything significant. On the daily right here, we come into that first resistance area. The first resistance area is perfect. We overtake that resistance area with a new fair value gap lower. Actually, two fair value gaps lower right there. And when we have two fair value gaps lower right there, based on high probability conditions, based on fast price action, based on a balance that we just talked about, I would expect only the first daily fair value gap right there to be traded into, to then continue lower off of that. So trading into the second fair value gap that we have is already suspicious to me. that's not supposed to happen, as in that's not the highest probability price action to happen right there. That's a little bit suspicious. Then the next thing here is that we do not respect that daily value gap at all. So when we already had aggressive moves higher, actually, I believe Thursday right there, on the Thursday live session, we mentioned that I do not think that we could continue lower right there. I definitely think we might actually continue higher, where we are not respecting anything right there. And leads also to the understanding that we never really had premium rays being in control of price. As in, if premium rays are in control of price, then right there, this next candle should continue lower, because then we are respecting the premium rate to then create a new daily value lower off of that. That's when we have respect of premium rates. Where until this moment, again, not the nicest price action, but we only had bullish price action and we only had a discount rates in control. So that's very important to understand as well. So right there, it's not getting married to a bias, because that will get you burned. Where right here, you want to switch it very comfortably, keep an open mind. Where initially I expect a lower price, but I'm also very comfortable with switching that around and saying, all right, I'm most likely wrong right there. Well, not necessarily wrong. My expectation is just not met to continue lower, which could be another word for being wrong. Maybe I'm just coping, but it makes it easier to then switch the bias bullish right there. And that's very important. Then look at Nifty. Nifty right here is very messy price action overall, and do not necessarily like it right here. We've just been consolidating, so nothing really interesting for me to tell you about that. Let me go over the questions first before we dive into the breakdown list and we go further down the rabbit hole as well. Let me pause the recording here as well. All right, yes, GBP JPY right here. So let's actually dive into this. This was the first one that was moved to my breakdown list, and the reason being for that was also time. So let me actually get the right week right here again. It was also time, as in we did not have time supporting the ID a lot. It was during specific days, where mainly Tuesday right there and the rest was just a bit meh. So overall, we had the weekly value gap, which we can look to continue higher off of that. And the daily right there failed to create a daily value gap higher, which to me was not something I would want to be a part of in a filtering process trading plan. Again, flow trading plan right here, or somewhat of a hybrid model, which is something we'll get into in the spring enrollment as well. Then right there, we can potentially look to continue higher off those 4-hour value gaps, because again, we just have very nice 4-hour value gaps to look to continue higher on that news day as well. To then, or is that on the news day? Or am I mistaken? I am mistaken right there. So that's Wednesday. So that's not on the news day actually. Where eventually we do look to continue higher as well, continuing to target those highs. Again, personally, not something I would want to take right there, purely because we did not create a daily value gap higher, which I do not like to see. And it leads me back to the same story of balance, because right there, we respect what? We respect those weekly swing highs. So then the retracement into the weekly value gap becomes deeper and more difficult to navigate. So ideally, you want to wait a little bit longer and you want to capitalize on the last moves that we saw right there. All right, GBP New Zealand dollar right here. This is quite easy to understand. And the reason why I say that is because we have a weekly value gap right there, which this one right here, the previous candle, we already reject off the weekly value gap higher. So we already respect it to some degree. And on the daily right here, I would want to see daily fair value gaps higher, ideally, and 4-hour value gaps as well. But the daily right there is quite important, of course, if we actually want to push higher, and the 4-hour right there should support the ID. Because the 4-hour right there, like we mentioned on ES as well, and similar like NASDAQ, then if we want to continue higher right here, the daily value gap not being created, okay, I can live with that if the 4-hour still supports the ID overall. So there's no real bearish signs. And afterwards, we start to create bearish signs and we start to create clear bearish price action as well, which is, of course, not ideal in this scenario, creating unusual context to target those lows, eventually continuing lower all the way. Now, once this target is hit, it's the same story again of that balance, and you see it come back a lot of times. Where if the close below that low was there, we had a nice overlap with the lows, it would have been a whole different story, where we would not have big retracement and a consolidating price action like that. Now, once this happened as well, my original idea of higher prices was invalidated, and we already reached the unusual context low. So it's not something I was interested in anymore. Australian dollar, New Zealand dollar, where we came into the daily FVG gap right there on Monday. And this was very nice price action at the beginning of the week. Well, I say very nice price action. The draw on liquidity was, to me, just extremely clear. Like, there was no doubt about that we are going to deliver towards those lows right there. We came into the daily FVG gap right there, which we can deliver lower from if we want to target those lows. And on the 4 hour and on the 1 hour and on the 15 minutes, if you study this price action a little bit deeper, you can also see that the price action just wasn't that nice. It just really, the delivery wasn't that nice. Where the draw on liquidity again, and it's a reoccurring theme during this week, where the draw on liquidity is quite clear. The delivery was just not super nice overall. So right here, we also had a bigger retracement, and the reason I marked it that high is because I mentioned during forecast as well, I do not necessarily want to chase price right there, because for me, it becomes then quite difficult actually to look to get involved, where that might be a little bit contradicting to what I told you about the story about if you wait for longer, then that is exactly where you want to get involved. For example, the GBP JPY example we just had. But in this moment, we do not have clear displacements like GBP JPY. So if I were to enter somewhere here, then I'm entering right there with a lot of consolidations, a lot of swing highs, a lot of different choices on where I can place my stop loss. So the only safe choice where my stop loss is definitely safe if we want to continue lower is this high right there. In the meantime, we can retrace, can do whatever it wants, take out all those highs to then continue lower off that, because we are just simply consolidating. We have all those swing highs, so there's not a clear choice, not a high where we can confidently say, all right, this one is definitely respected. And the only one that is definitely respected is the one that came into the premium rate right there, is the ST high. So that is exactly the thought process here as well, where again, the draw liquidity is quite clear overall. Eventually we continue lower, where I was not super interested anymore. And the reason being for that again is because the news was not really supporting the idea anymore. And we also already delivered towards the targets. Euro Australian dollar, let's see. This quite an easy breakdown, because I waited for a daily FVG gap, either higher or lower. And this is again the rejection story. Where we're coming off that weekly FVG gap, we are currently having a rejection. So either a daily FVG gap lower or daily FVG gap higher to confirm the idea of what we actually want to do. And we never created that. So not interesting to me. Euro New Zealand dollar right here. We are sweeping those lows, and we are then coming into that daily FVG gap right there as well. I think my initial idea was potentially to look at longs actually, where we are coming off the weekly FVG gap, we can potentially look for higher prices. We are respecting a premium rate as well. So I wanted a little bit more confirmation here. Ideally daily FVG gap, new 4 hour FVG gap higher right there to get that more confirmation again, to be confident about the draw on liquidity. Where eventually we created unusual context. We create this daily FVG gap to continue lower off of that. And we did not have new support in the idea anymore. Other than that, price itself was quite nice, but time was not supporting with the ID right there. So I did not want to look to get involved anymore. Australian dollar CHF, right here. We I initially want to see lower prices right there off of the daily FVG gap. Off of this daily FVG gap right there. Now, the aggressive move into that daily FVG gap, which was already seen on the 4 hour as well, was just not super interesting to me. As in, I did not really want to look for lower price anymore. Then we had a 4 hour ST right there. All right, if we then want to continue lower, I either want more confirmation that we actually want to continue lower right there. Otherwise, I'm not too convinced that we actually want to continue lower. Coming into the daily FVG gap right there, and eventually continuing higher, not having the best opportunities overall, where eventually, currently, of course, next week, this could be interesting to potentially continue higher right there. But overall, the lower price initially were just invalidated by the aggressive moves higher and creation of the daily FVG gaps higher as well. Australian dollar JPY right here. Let's see. We sweep those lows. We run into a resistance area right there. And I actually want to see higher prices right here, where the higher prices to me were confirmed once we actually have 4-hour value gaps, again, supporting the idea of continuing higher. And those 4-hour value gaps should not be 4-hour value gaps like this. This 4-hour value gap right there is, again, that can hold. But the thing is, that might have consolidating price action, might have a bigger retracement into that 4-hour value gap to then eventually continue higher off that. So the chance that I will take a couple of losses before I get the right move right there is just significantly increased. So that's of course not what we want to do. Ideally, we don't want to take any losses before we take a winner, which allows us to have a good win rate, which allows us to have a better return, which is the basis of being a trader. Eventually, we continue higher as well, where we actually talked about this in the FVG session. This could be unusual context right there. And I initially viewed that as well as unusual context, where eventually on the 1 hour, we do not follow through lower, which we also mentioned in the FVG session that we did not create a new FVG lower, which was of course a bit suspicious, not something you would want to see right there. Then you have this 5-minute FVG gap, and we create a bullish FVG gap right there actually, which is just overall not the ideal price action you would want to see. Then Canadian dollar JPY. Let's see. Canadian dollar JPY creating daily fair value gaps higher right there. Now, the only real reason why I did not actually trade this was mainly as well because of news right there. And when we look at this, we have the daily fair value gap. Eventually, we did not create a new 4-hour value gap higher off that, which also prevented me from taking the trade. And well, eventually we create 4-hour value gaps. We did not trade back into them. So the drawn liquidity was quite clear. Where we are continuing higher from, quite clear. Overall, the delivery was just not quite clear right here on Canadian dollar JPY. Then, before I forget about it, there's one more here. GBP Australian dollar. And GBP Australian dollar is same story. We have this daily premium rate that is being respected. Daily fair value gap sitting there as well. At that moment in time, I want a little bit more confirmation than usual. So more confirmation than just the 15-minute ST plus RE. I would like to see the 4-hour right there have at least a fair value gap higher to confirm the ID, to be confident about the ID as well. Then that is again a filtering process trade plan. If you're a hybrid trader or a flow trader right there, 1 hour right there is also already enough in my opinion. Then this 4-hour value gap was actually quite nice to continue higher off that. Only thing is, again, news was just not necessarily supporting ID, where we do have some Australian dollar news on Thursday, overall it just wasn't super nice. And with not super nice, I'll tell you why. The 4-hour value gap, we come into that. Next candle, ideally being an up candle, because we already confirmed the ID, we can already look to continue higher off that. This bigger retracement is something I do not like. When you have a very nice ST initially, it is a good sign that we actually want to continue higher already. Then we have almost a very miserable RE right there, which has a huge retracement as well. Is all signs I do not like overall. And then eventually when we then continue lower and we do not respect anything right there, we do not have more confirmation as well. And this is something I would not want to get involved in anymore right there. All right, that was it for this week. And let me stop the recording right here to go over some questions. Perfect, thank you.